Hello everyone. Today we are taking a deep dive into this Reuters story. Investors expect US dollar to break higher as Fed battles inflation. We are going to break down exactly what happened here and what the real risks are that every investor should know about. But before that, you are watching Decode Daily News, where we take the biggest business and finance stories and decode them so anyone can understand. If you are not subscribed yet, hit that button right now. So let us get into it. The US dollar, long stuck in a tight trading range, could be in for a break higher, so that line really caught my attention, and here is why. The dollar has essentially been frozen, not crashing, not surging, just sitting there, going nowhere. And that kind of stillness in a major currency is actually rare. It means everyone is waiting. Nobody wants to make the wrong call. And when that kind of uncertainty breaks, it tends to break hard in one direction. Let's see what is written ahead in this same news paragraph. As the Federal Reserve shifts its focus to fighting worrisome signs that inflation is heating up. Now sit with that for a second. The Fed was supposed to be cutting rates by now. Markets were pricing that in. But higher oil prices from the ongoing conflict in the Middle East have changed the math completely. When oil gets expensive, everything gets expensive, and the Fed cannot ignore that. And this is where the real story is. Market-based measures of long-term inflation expectations, known as break-evens, rose to a 3-year high of 2.508%. Pause right there. 3-year high. That is not noise. That is the market genuinely pricing in more persistent inflation. And when long-term expectations rise, the Fed has almost no choice but to lean harder against it. And that brings us to the part at the center of this whole story, on the benchmark 10-year note earlier this month. And think about what that actually means. That number is not just a statistic. It is the market sending a direct signal to the Fed. Yields go higher, dollar follows, and anyone holding international assets quietly feels that pressure on their returns. Here is the piece that reframes everything. The new Fed chair, Kevin Warsh, had long been expected to pave the way for rate cuts, and here is what that really tells you. Everyone had a playbook built around rate cuts coming. Portfolios were positioned for it. This was supposed to be the year things got easier. And then came the number that changed everything. But mounting inflation expectations have made that less likely. And that part is worth sitting with. A more hawkish Fed means borrowing stays expensive, growth slows, and the dollar gets a lift, which actually hurts international investments for US investors. The playbook may need to be completely rewritten. That is exactly where my take comes in. But real quick, before I give you my take, this video is for educational purposes only, not financial advice. Always do your own research before making any investment decisions. So, what this story is really telling you is that the regional situation in the Middle East is now a direct input into your financial life, not just an abstract headline. The ongoing conflict is moving oil is moving inflation, and inflation is moving the Fed. That chain of events is now the most important thing in markets. A stronger dollar sounds like good news on the surface. But if you hold international investments, emerging market funds, European equities, anything priced in foreign currency, a rising dollar quietly eats into those returns. That is the part most people miss. And the wild card that nobody can fully price in right now is how long this situation lasts. A resolution could flip everything. Lower oil, lower inflation, rate cuts back on the table. But investors are not betting on that. They are hedging for the opposite. So the question to sit with is this. Is your portfolio built for a world where rates stay higher for longer than anyone expected? Because right now, that is looking like the more likely scenario. If this kind of breakdown is useful to you, hit like and subscribe. It genuinely helps this channel keep going. And I want to hear from you in the comments. Do you think the dollar will keep strengthening, or do you see something that could reverse it? Drop your take below.